All right, good morning, everybody. So we're back at it another day. We're going to get some inflation data this morning. The CPI is one of those days where we can get a liquidity gap. I always like the opportunity to get a liquidity gap. So after that, things should clean up rather well. We're still dealing with energy crisis. But for today, really everything should be done in the first part of the day. Gives us the afternoon for potential 0-day plays. The Nasdaq's taken a little bit of a beating. S&P behind that, close to 0.5%. But small caps and the Dow doing better. Hong Kong in the green. So a really broken market. Certainly not uniform. All right, we got an auction at 1 o'clock. This is one of the bigger ones that I tend to pay attention to. 10-year note. Once we're done with that, then we're good. I'm not too worried about what Goolsby's going to say. You should always be mindful that there's a Fed guy speaking, but you know, unless they wreck something somewhere or some reporter takes them out of context, they're not likely to say anything that's going to rattle cages. So, you know, foot in mouth saying something they didn't mean to say, being taken out of context, misquoted, something like that is more likely than them actually having something relevant to add to the conversation. So once we're done with the auction, should be good to go for the rest of the day. We are expecting the inflation report to show things a little hot at the same time that a lot of analysts are arguing, yeah, the numbers are going to be up, but it's not really that hot out there. Anybody who's been around statistics and averages and figures and numbers know that you can twist the data to say whatever you want. It's all about how you present it. I think their argument that they're using right now is, well, we were in a government shutdown a year ago, so the year-on-year numbers are going to be off because of that. Whatever. Things are more expensive. Inflation is rising. It's going to feed right back into whether or not they are going to hike, and if the market is pricing in that hike, how aggressive are they pricing it in? So as I mentioned the other day, you can look up and down the curve. Just look at where we are at and then jump from one meeting to the next. So here's where we are. There's a hike, 6%. That's September. Go to October, it goes to 17%. And then 27, 32, 36, 37, 36. So that's where it's still at, right? The April, June of next year is where the curve starts to slow down. Those numbers that I was reading out, they were running in a bit of a rise like that. Then they kind of tapered off and curved over a little bit. So just keep your eye on it, see if the numbers jump up significantly or just begin to get crushed. If they unwind those numbers, then they're unwinding the probability of a rate hike, and that would really juice the market to the upside. Chips are getting whacked a little bit this morning, but crude is up with the VIX. Ag. It's a broken market this morning. All right, we don't really have much on the president's schedule today, except that he's going to depart the White House en route to Beijing, China. Yeah, that's really it. That's all we got. $90,000 in the overnight, so we had decent participation. The the average is around 50, so we're coming in well above that. It still seems a little light, compared to what we've had the last couple of weeks. 90 just doesn't really didn't really feel that hot, but it's still above average. Morning, morning. So we're working on an inside day breakout to the downside where we already broke out of the RTH. We're still just sitting inside of the full trading day of yesterday. Still above all the major moving averages. It hasn't even flattened out yet. Right? So if we finally break the 3, we can aim for the 10, cross the 10 to get the 20. You get the idea. But having them spread out like this and the slope that they have, that is a very bullish image right there. And we've had these days where we get one red day, right? One pullback as these little mini breathers, these little mini pauses before we continue on. And so far as we know, that hasn't changed yet. They rolled the call wall up again yesterday. So yes, they moved the put wall. We talked about that yesterday. They moved it down. Now they've moved the call wall up. They're giving themselves room for another leg higher or lower, clearing a path. So yesterday we talked about the put wall being rolled down and how just because it rolled down didn't mean anything yet because we didn't know if it was going to stay there. We could have come in today and had it rolled right back up again, which it didn't. It's still there. So that tells us it's likely going to stay there for at least a little longer. But then we come in today and they rolled the call wall up, making room to the upside. It's still a coin toss on which direction we're going to go, but they gave themselves the choice and the room to be able to go higher. So yesterday, when the call wall hadn't rolled, but the put wall had, it had all of us looking to the downside because that was the only thing that they were adjusting, was making room to the downside. Now they've made room to the upside as well. So if we can get that inside day breakout to the upside, get above that 74.50, then we can make a run to 75 and then 75.25, 75.50. Still above the volatility trigger and the 0 gamma and all of those levels, so don't have any of that to get in our way. There are some combo levels up there, but the 74.50 combo is basically yesterday's high, so they're just overlapping. We're not quite there, but we are getting close to the ADR half. If we can get to the red line early enough in the day, we can go to the other red line by the end of the day. I know that might seem bullish, but it would not be bullish. It would just be a part of how price moves, right? Over the last 21 days or one market month, our average move has been about 75 points. Well, two-way markets, right? It doesn't mean that we're going to spend all 75 points going to the upside or all 75 points going to the downside. We want to split that up a little bit. And that's the distance between these two red lines. So from where we opened last night in the Globex, cut in half, we could go down half, up half. That would give us our ADR half. It's what we've been doing on a day-to-day basis. Why would today be any different? So if we do get bullish, we'll make it to the yellow line, 7,500. And if we do get bearish, we'd make it to the other yellow line, 73.60. We have the potential for a liquidity gap this morning. It'd be a big bar. Hopefully you've seen the discussions we've had on that. I've covered it a number of times. Today's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. It's a narrower channel today than it was yesterday, but it's still a wider channel than we would want. A wide channel implies that if we attempt a breakout, it likely doesn't stick and we come back inside the range again. The range that we're talking about is yesterday's price action. So yesterday's high, yesterday's low, breaking out of that and then being able to keep the breakout. These wider channels imply that even if we do get a breakout, it likely won't hold, and we end the day inside this range. Just keep in mind that these channels and these floor pivots, they don't make price do anything, and they won't stop price from doing something. They're more of insight into what to expect for the day and less about what they can do to price. S1 73.98, basically 7,400 down here. There's a market phrase that says S1 to R2. That would have us target 74.92 cog line all the way up here. It would also reinforce the idea that we get to the lower ADR half and then we make a run to the upper ADR half. If we do get below S1 and yesterday's low, then we'll target S2 and then the weekly floor pivot 73.50. All right, we still got last week's point of control as a structured level that we can focus on. It's also Sunday night's low, or the week's low, if you want to look at it that way. So 2 layers of leveling there. But once we get through that, there's not much that's going to help us out. So basically from 7,400, we're looking at what, 7,250 before we even get any help. $72.75, and that would come from a multi-week level here. All right, we got some points of control that we can also lay on there. 7160 and 7070. But that's not going to help us when we're sitting in the 7400 area. Ten-day, 30-minute volume profile in TPO. It's still ugly. Nothing good here at all. The point of control on the TPO has already moved up. That's where we are expecting the point of control to go from the volume profile. Same area, land up in this. Now, once it gets there, the idea that we can just keep crossing back and forth in that spot, nothing wrong with it. It won't act as a sudden resistance that's holding us back and stopping us from moving higher. In fact, instead, it gives us some structure that we can move off of from there higher. So having it move up into our zone isn't necessarily a bad thing. A lot of times, though, when we do see the point of control move up like this into an established zone, more often than not, we end up breaking down below it. Just keep in mind, it doesn't owe us that, right? So it is likely that by the end of the week, we'll have it up there and these two will match again, the TPO and the volume profile. Maybe even by the end of the day today, if we continue to hang out at this cog line. And by next week, we'll have a much narrower profile. Unless we break back down below 7,200. And there's no reason to think we're going to get that yet. No new VPOC from yesterday. That key level from May 8th, we were able to run through it. We're done with that. We really don't have anything this morning to get from yesterday's price. We've covered all the highlights already, breaking down through the point of control and even taking out this larger footprint. In fact, that's where our current point of control is. We're still 4% plus above the 10-week. So we're running hot, but not hot enough that it owes us a mean reversion. We haven't gone too far too fast, and we can still go up from here. We have room. Now on the daily, we're only 1% away from the 10-day, and that is not overbought. It's not overextended. It hasn't moved too far too fast, and we could easily move 2% higher from our current location. Of course, to the downside, we could move 4% today and just barely be touching the edges of having moved too far. So, because we are up, we could give back that 1% and then travel 3% more below the 10. And we would just be scratching the surface of too far. So from our current location, things are fine. We're not running hot, and it doesn't owe us anything. And if you look at what we've done on the week, that gray line is last Friday's close. And so far, we're inside day of yesterday's range. We got nothing. All right, the Mag 7 up volume is down, but the up volume was up almost 15% in a 5-day period. I mean, 15%, kind of due for a little bit of pullback there. Bitcoin, gold miners, junior miners, chips were running really hot too. They were running close to 13% in a 5-day period, ready for a bit of a pullback there as well. I wouldn't read these being bearish just because they're down a little bit this morning. They were running way too hot. They needed to take a break, call timeout, maybe pull back a little bit. So I wouldn't get all bared up out there and try shorting a large portion of this market yet. Nothing wrong with finding some small opportunities or some low risk plays, right? I just wouldn't pivot my portfolio short heavily yet. Solar, nat gas, Mag 7, robots, UFO, software, uranium. We, we run the gauntlet of just about everything that we would want to look at, all of it down. The one thing that really stands out, though, is that market breadth isn't in control right now. VIX, crude, treasuries, they're in control. So they're really what you want to watch. And with what's going on in the UK right now, and maybe they get another prime minister and the movements in the gilts, I'd say keep your eye on treasuries today. Financials are up a little bit this morning. Maybe keep an eye on them, see if they have something to offer through the morning. You know, XLF is really generic because it's got insurance and trade desks and all kinds of stuff. Keep your eye on banks instead. KRE, right? It's what I watch. KRE and MAGs. So keep your eye on those banks. Otherwise, we're going to want to dig deeper into what names inside that XLF are moving around. Is it the insurance companies or, one of the trade desks? I wouldn't be surprised if a lot of those brokers that were getting hot last year, like ICE and Schwab, NASDAQ, that was another company that was doing well. I'm not going to be surprised if they get a little bit of a bump once this day trade limit is officially removed, right? They're getting rid of the whole PDT 25K day traders restriction. And that just means a lot more profit for those brokerages. Fees and commissions, right? All right, it's a pretty easy day, all things considered. Other than the morning 8:30 print, we don't really have a whole lot to be worried about until 1 o'clock with that auction. So get through 8:30, see how this print works out. GTFO, like it always is, we got to get out of the box if we want to get anything else done, and this is the box to deal with. So to the upside, get back through the mid. Then you can challenge the Globex high, yesterday's high, and the ADR half. To the downside, we're already outside of the RTH of yesterday. We just need the full low of yesterday. And to do that, we got to cut through the ADR half. So Globex low, ADR half, yesterday's low, and then the full ADR down here. Level by level, right? It doesn't really matter which way we're going. It's destination trading 101. We got an idea where we're headed. Just focus on getting another bite. It's OPEX week, guys. So keep that in mind as well, right? So what I got for you, be careful, be safe. Watch those treasuries. I'll see y'all tomorrow.